there is a very limited buyer pool for the coal side of the business. I don't think you're going to see Vale or Freeport commit capital to a business that includes a significant component of cash flow from metallurgical coal. And that's why it's so important for the Teck board to really affect a clean split, a clean breakthrough, if you will, and allow both businesses to kind of move forward and, fulfill their own destinies, which are very different from each other. Post a clean split, I can very easily see numerous parties come to the table. But we have to remember, at the end of the day, it's the Keevil family that continues to call the shots. And, we could have a very competitive bidding process, but, to the extent that they don't see what they're looking for, this may not go through. And it doesn't sound like it's all about price. There is an economic nationalism element at play here as well. The Canadian government has said they're watching this closely. Securing strategic metals is a very big component of what this government is trying to do, and indeed all governments around the world are trying to do. And so there are a lot of moving parts here, but I don't think anything really starts to accelerate, if you will, until the Teck board finds a way to split the two businesses cleanly.
Right, but does it make sense to split the metals and the coal business?
From a capital markets perspective and from an investor perspective, absolutely. From a cash flow perspective, not so much, but you can find deal structures that would arguably realize fair value for the coal business and shore up the metals balance sheet to really support and fund that tremendous growth pipeline that they have. The coal businesses tend to trade at a discount to metals business, particularly copper-intensive metals businesses, because, let's face it, copper is the central metal to any decarbonization efforts and does and will continue to trade at a premium.
But we're talking about met coal, we're talking about coking coal here. So can't the case be made that there are a number of companies who could just gobble up, and Vale is particularly one of them. I'm thinking off the top of my head, some that could have the requisite heft, like a BHP, like a Rio Tinto, that could gobble up Teck in its entirety and then just strip it off for parts on an asset-by-asset basis, rather than perhaps dealing with the ongoing issues that you are going to face if you're trying to come to some kind of an arrangement when it comes to splitting the company in two?
You're right, and it is a definite possibility. I have flagged that in my written research as well. It's a non-trivial probability that we do see one or more deals, particularly from Glencore, but also from potentially Vale, come to the table ahead of a split. That said, from a buyer's perspective, it is a more complicated structure. And then from Teck's perspective as well, I don't think they'll see the valuation that they want if they're going to sell the business as it stands today.
Really, really quickly, do you think that they could just sell the coal assets without a spin-off? Is that a path that's credible at all?
A sale of the business would be one avenue to go down as part of the split, right? And yeah, it could be an entire sale of the business. I'm not quite sure there's the appetite for a business this large. You have to remember, this is the second largest metallurgical coal business in the world, right? So a sale, in my opinion, would involve some sort of a public-private type transaction where you float a piece of the business and then you put a syndicate of private entities together, steel makers, private equity firms, and so on, to take a portion of it private.